Ladies and gentlemen, good day and welcome to BSE's Q1 FY22 earnings conference call. My name is Faizan and I'll be the moderator for today's conference. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yogesh Joshi, Head Investor Relations, BSE Limited. Thank you, and over to you, sir.
Thank you. Hello everyone and welcome to BSE's earnings call to discuss Q1 FY22 results. This is Yogesh from Investor Relations. Joining us today on this earnings call is BSE's leadership team consisting of Mr. Ashish Kumar Chauhan, Managing Director and Chief Executive Officer, Mr. Nayan Mehta, Chief Financial Officer, Mr. Samir Patel, Chief Business Officer, Mr. Girish Joshi, Chief Trading Operations and Listing Sales, Mr. Karshi Tawadia, Chief Information Officer. Do note that the conference is being recorded and the transcript of the same will be available on our website. The financial result and investor presentation are also available on our website. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Any forward-looking statements that we'll make on this call are based on assumption as of today, and BSE assumes no obligation to update these statements as a result of new information or future events. I would now request Mr. Ashish Kumar Chauhan to give a brief overview of the company's performance, followed by a question and answer session.
Thank you, Yogesh. Good evening, everyone, and thanks for joining the call today. We are almost 1.5 years since the onset of COVID-19 pandemic. I believe many of us have taken the required doses of COVID vaccine and look forward to resume our daily schedules similar to one before COVID-19, in spite of the apprehensions of third wave of the pandemic in near future. BSE too, as a socially responsible corporate, has supported various entities in their COVID relief efforts. As expected from BSE, it has continued to operate without any interruptions and glitches during this period. I will start with the broad financial results. This quarter, ending 30th June 2021, BSE's operational revenues have grown by 52% as compared to corresponding quarter in the previous year. Further, BSE net profit grew by 61% for the quarter ended 30th June 2021 to 53.42 crore as compared to 33.15 crore in the corresponding quarter of the previous year. The growth in revenue and profits is mainly due to growth in operational revenues across business segments. Let me start by covering our primary market segment. During the quarter ended 30th June 2021, in spite of the lockdowns due to emergence of second wave of pandemic, various issues raised over rupees 45,242 crore through 76 issues on BSE bond platform. BSE bond platform continues to be the preferred choice by India Incorporated to raise debt capital markets through private placement structured instruments, public issues and also municipal corporation bonds for issuing municipal bonds. Various issuers also raised more than rupees 1657 crore through IPOs, preferential and rights issues during the first quarter of the financial year 2021-22. The above is in addition to over rupees 3,04,157 crore of privately placed debt and commercial papers listed on BSE during the said period. The total number of investors registered with BSE have been consistently growing and currently they stand over 7.6 crores as of date. I will now update on you the trading platform at BSE starting with equity segment. BSE's average daily turnover in the equity segment increased by 52% from rupees 3724 crore in first quarter of financial year 2021 to rupees 5661 crore in the first quarter of financial year 2021-22. The same is also reflected in the company's strong operational performance in the current period. BSE's market share equity segment increased from 6.3% for the quarter ended June 30, 2020 to 7.2% for the quarter ended 30th June 2021. As mentioned in our earlier earnings call, BSE is seeing increasing participation from high frequency traders. Further, enablement of base price execution by certain large broking houses has also resulted in the increased turnover in our equities segment. However, BSE is yet to realize the full potential and benefit of interoperability across clearing corporation. It has been observed that many trading members are not yet providing the facility of interoperability across clearing corporations to their clients. This has resulted in the benefits of interoperability as envisaged by SEBI, like netting of trades across exchanges, lower margins, etc., not being offered to investors. Further, interoperability also facilitates best price execution of trades across exchanges. Delays in implementation of interoperability leads to delay in best price execution, thereby depriving the investor of execution on their orders at best possible rates. In interest of investors, penalty has been imposed on trading members for not extending basic price execution facility to all clients with effect from 1st July 2021. It may be noted that BSE has increased its transaction charges in the equity segment effective March 1, 2021 to bring it in line with the competitive exchange. BSE's equity derivative segment average daily turnover increased by 80 times from rupees 3848 crore in the first quarter of financial year 2020-21 to 3.15 lakh crore in the first quarter of financial year 2021-22. BSE's market share in the equity derivative segment increased from 0.3% for the quarter ended June 30, 2020 to 6.5% for the quarter ended June 30, 2020. The launch of Sensex 50 contracts differentiated expiry date from 29 June 2020 attracted a lot of attention and interest from the market participants. It is expected that growth in BSE's index derivatives would set grounds for growth in stock derivatives and BSE's equity segments too over time. BSE is India's second largest commodity derivatives exchange in India and offers a wide gamut of products across agri and non-agri segments. The average daily turnover in our commodity derivative segment for the quarter ended 30th June 2021 increased to rupees 3267 crore as compared to 3156 crore for the same period in previous financial year. BSE's market share in commodity derivative segment increased from 2% for the quarter ended 30th June 2020 to 9.1% for the quarter ended 30th June 2021. Currency derivative segment continues to provide a very liquid platform for trading in currencies. The average daily turnover in our currency derivative segment for the quarter ended on 30th June 2021 increased by 29% to rupees 23,618 crore as compared to rupees 18,325 crore for the same period in previous financial year. With increasing focus on Make in India products and Atmanirbhar Bharat, small and medium enterprises need to be provided with capital to enable their growth. BSE has been encouraging and growth with governance of SMEs in India through listing on its BSE SME platform. As on 30th June 2021, 340 companies were listed on BSE's SME segment. The state companies have raised funds amounting to rupees 3515.93 crores. The market capitalization of these companies listed on BSE SME segment as on exceeded rupees 29,020 crores. BSE's market share in listing of companies in SME segment stood strong at 61% as of 30th June 2021. BSE is the first exchange in India to launch startup platform in December 2018 for promoting listing of startup in ITs, ITES, biotech and many other high-tech industries. 10 startups have already raised rupees 34.62 crores on this platform and are listed on this platform as on 30th June 2021. We shall now discuss mutual fund distribution platform. BSE Star MF, India's largest mutual fund distribution platform, set new records in the current financial year. The total number of transactions on BSE Star MF during the quarter ended 30th June 2021 grew by 90% to 3.54 crore transactions as compared to 1.86 crore transactions during the quarter ended 30th June 2020. Thus, the average daily number of transactions on BSE Star MF during the quarter ended 30th June 2021 was 5.48 lakhs as compared to 3.15 lakhs for the quarter ended 31st March 2020. The platform recorded highest number of transactions in a single day of 19.51 lakh transactions on 12th July 2021, surpassing the previous base record of 17.84 lakh on 12th April 2021. BSE Star MF platform is the platform of choice for investment in mutual funds by investors. It continues to witness consistent net equity inflow over the industry's net equity inflow. BSE Star MF platform recorded a net equity inflow of rupees 6072 crore as compared to industry's net equity inflow of rupees 5988 crore for the quarter ended 30th June 2021. BSE Star MF platform continues to scale new peaks of transactions every month. The platform has increased the record of 17.84 lakh transactions on a single day on 12th April, surpassing the previous base record of 15.52 lakh transactions on 5th April 2021. The BSE Star MF app launched in May 2019 to help mutual fund distributors register clients on real-time basis and execute paperless transactions has been well received by the investment community and has processed over 26 lakh transactions till date. BSE promoted international exchange in GIFT City, Gandhinagar. India NX has been growing exponential ever since it commenced trading activities on January 16, 2017. Average daily trading turnover on India NX during the quarter ended June 30, 2021 increased by 522% to $11.97 billion as compared to $1.92 billion during the previous quarter ended 30th June 2020. It has witnessed an all-time high turnover of $30.30 billion on March 10, 2021. Previous all-time high turnover was $28.24 billion on 4th March 2021. This increased trading activity validates the new products and initiatives taken by India NX and reflects growing interest in IFSC among the broking fraternity. Even during the COVID-19 pandemic and lockdown, India NX was operational for 22 hours non-stop and has maintained its leadership as the number one exchange in IFSC. India NX is the dominant IFSC exchange in GIFT City with a market share of 87% in derivatives trading and 100% in bond listing for the quarter ended 30th June 2021. Owing to investments by certain strategic and financial investors, BSE stake in India NX has come down to 79.78% and BSE stake in India International Clearing Corporation has been brought down to 72.1% as of 30th June 2021. BSE IBIX Insurance Broking Private Limited, a joint venture of BSE and IBIX FinCorp Exchange Private Limited, is registered with Insurance Regulatory and Development Authority of India as direct life and general insurance broker. Currently, its electronic insurance broking platform is integrated with 7 general insurance companies, 5 health insurance companies, and 3 life insurance companies. Further pending integration, portal of insurance companies being used for certain insurance companies to facilitate intermediation of policies. BSE IBIX has over 4,400 active certified point of sales. The number of policies intermediated by BSE IBIX increased by 9% to 1517 during the quarter ended 30th June 2021 as compared to 1388 during the quarter ended 30th June 2020. The gross premium collected during the quarter ended 30th June 2021 rose by 4.5 times to rupees 2.83 crore as compared to rupees 52 lakhs during the quarter ended 30th June 2020. BSE holds equity stake of 40% through its subsidiary BSE Investment Limited. BSE E-Agriculture Market is a JV between BSE Investment and Frontier Agricultural Platforms Private Limited, operates a nationwide electronic institutionalized transparent commodity spot trading platform to facilitate spot agricultural commodities transactions across value chain consisting of producers, intermediaries, ancillary servers, services and consumers. It is already enrolled 580 members including 441 farmers and 10 FPO members, 199 trades worth rupees 139 lakhs in 6 agricultural commodities were executed on the platform during the quarter ended 30th June 2021. Considering the market and opportunities, this platform is expected to grow at a faster pace in time to come. Regulatory approval has been sought for enabling spot trading of non-aggregate commodities on this platform. As informed in our earlier call, the Power Market Regulator, Central Electricity Regulatory Commission, has granted registration on 12th May 2021 to Pranurja Solutions Limited to establish and operate a power exchange. The company proposes to commence live operations sometime during the current financial year 2021-22. BSE has a stake of 22.61% in the proposed power exchange through its wholly owned subsidiary, BSE Investment Limited. On a consolidated basis, BSE's operational revenues grew by 52% to rupees 103.22 crore for the quarter ending 30th June 2020 to rupees 156.95 crore for the quarter ended 30th June 2021. The transaction charges revenue has increased by 93% from rupees 30.25 crore for the quarter of ending 30th June 2020 to rupees 58.43 crore for the quarter ended 30th June 2020. Listing related fees increased by 25% from rupees 39.08 crore for the quarter ending 30th June 2020 to rupees 49.07 crore for the quarter ended 30th June 2021. Book building fees also supported growth in operational revenues. Book building fees increased by 3.7 times from rupees 1.82 crore for the quarter ending 30th June 2020 to rupees 8.48 crore for the quarter ended 30th June 2021. The clearing and settlement operational revenue has also increased by 88% from rupees 9.99 crore for the quarter ending 30th June 2020 to rupees 18.78 crore for the quarter ended 30th June 2021. Net profit attributable to shareholders of the company increased by 61% from rupees 33.15 crore for the quarter ended 30th June 2020 to rupees 53.4 crore for the quarter ended 30th June 2021. The operating EBITDA has increased by rupees 55.08 crore to rupees 41.31 crore for the quarter ended 30th June 2021 as against operating loss of rupees 13.77 crore for the quarter ended 30th June 2020. The operating EBITDA margin stands at 26% for the quarter ended 30th June 2021 as against negative 13% for the quarter ended 30th June 2020. The net profit margin has increased from 20% for the quarter ended 30th June 2020 to 28% for the quarter ended 30th June 2021. Before I conclude, I wish to say that India seems to be entering a third wave of pandemic. And I wish everyone in this call to stay safe and healthy with their near and dear ones and follow all the COVID protocols that government has prescribed. With this overview, let me welcome you once again and invite all of you for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The first question is from the line of Devesh Agarwal from IIFL Capital. Please go ahead.
Good evening, sir, and many congratulations on good set of numbers and performance. So, firstly, I wanted to understand, sir, the increase in turnover. Although you touched upon that higher contributions from algo traders and some of the large brokers have been one of the reasons, if you can throw some more light in terms of what has been the real drivers, just for us to understand the sustainability of this increase in the volumes. And secondly, you mentioned some of the brokers have not yet implemented interoperability. We just wanted to understand if this were to happen, what could be the increase in the volumes? That would be my first question, sir.
So basically, in terms of sustainability, what happens is whenever markets go up, usually volumes go up, which you have seen even in other exchange over last few months. And so BSE is also beneficiary of that to some extent. And the interoperability is another large driver for us because many brokers who are not even offering BSE related services have started offering. And so that is a healthy sign. It's early days, but hopefully this will pick up and many people will be able to also understand that if you buy any share on BSE, you get the same dividend as if you were to buy the same share on any other exchange. So it's not that you get dividend less or more on any exchange, but sometimes it has been projected that way. And number of trades has increased on a peak basis from around 18 lakhs to close to 50 lakhs, and average we are going above almost 32 lakhs. So that also tells you that number of trades has increased, although the value per trade has come down because a lot of people are doing algorithm trading, and that probably the number you might like to watch. That currently, if you take away the blocks, the average value per transaction is now come down to 15,000 rupees per transaction on equities market. And so these are some of the pointers you might like to keep in mind. Otherwise, basically, this interoperability in some ways has brought in a new set of investors who had never been allowed to trade on BSE because of their brokers not wanting to connect, although they were members on both sides. And only for exclusive stocks of BSE, they were allowing at least some of them were allowing those orders to pass on to BSE. But now I think all of them are opening up due to these new regulations.
Understood.
Of course, one more thing helped is that in February 24, 2021, the competing exchange closed down for 4 hours. And that also gave them realization, many of them, that depending on only one party to run your life is a dangerous activity. And I think that is also help people come to the interoperability in some ways.
Okay, right. If you can, sir, share the name of some brokers who have kind of implemented this interoperability, which has led to higher volumes for us. And also, if you have done any exercise wherein if you assume that all the large brokers, if they move to interoperability, would our market share increase to say 12-15%? Have you done any such exercise?
You can always do such exercises. The proof of pudding is the eating, and you have seen the market share increase, which was going down for a long period. We won't be able to give any name of the brokers due to reasons of confidentiality.
Okay, sir. And sir, have you taken any increase in the tariff for the exclusive segment also in this quarter?
Exclusive segments, there is no interoperability because of the fact that they are exclusive stocks. Once they get listed on another exchange, then they start coming into interoperability.
No, sir, I was asking for the tariff. Has there been any
tariff remains the same. Tariff on exclusive stocks remains the same as earlier.
Because the number looks to be slightly higher based on the volume that we report. So on per lakh turnover, the number looks to be higher on the tariff. So is there any one-off income in the exclusive segment, sir?
No. What happens is today, if you see the smaller stocks, they have gone up also in value, which was not the case earlier. And so their number of transactions, their value of transactions increased slightly. And that's why you see that because we don't give the details of exclusive versus non-exclusive on the transaction charges. That's where basically you get a little here and there, but it's not that large.
Okay. And final 2 questions, sir. You mentioned that power exchange is likely to start this year. So any timelines as to when you are targeting to start that? And what would be the free cash on the books at the Concall level?
It's basically, in a way, we own currently around 22% plus on that exchange. And our cash on book, as of now, I'll tell our CFO to give you, as of now.
It's around 13,060 crores, which is
1,360.
1,360 crores.
1,360 crores is the current cash.
Free cash, right?
Free cash right now. But if you take in subsidiaries and all, it
will be about 2,200.
Right? So 2,200 crores on subsidiaries put together.
Okay. And for power exchange, I was asking, when are you likely to start the operations?
Our exchange should happen. They have already appointed a person to run it who has an experience in that business. And now he's taking the charge. Broadly speaking, the technology first portion is ready. The beta, or rather I would say pre-beta testing with some of the members have started. And so it's early days, but who knows, because there are still steps to going live, including the final approvals and all. So, I won't be able to hazard a guess on when the final approvals come and whatever the extra changes in technology that is required. But broadly speaking, they seem to have gone ahead with the pre-beta testing already.
Understood. Thank you so much, sir, and all the very best.
Thank you.
Thank you. The next question is from the line of Santosh Keshri from Keshri and Company. Please go ahead.
Hello, am I audible?
Yes, please.
Yeah. Congratulations for such a fantastic performance. It's heartening to see that BSE is doing so well, and we have been waiting for this for a long time. So my question is about the income from investment and deposits. In the quarter 1 of 2020, we had 47 crore odd income. And in this quarter, we have just 17 crore. So any reason that this has come down drastically, almost by 66%, by 2/3 in this quarter?
Santosh, it's like this. In the first quarter of 2020, this was after the COVID had started. So in the month of March, March 20, there was a big drop in the values of all investments, because everybody feared that there will be defaults after COVID started, and this whole thing rebounds by the end of June. So what happened is that the values of all our investments, which are basically into mutual funds, those NAVs went up drastically, and because of that, there was a lot of mark-to-market which we had to book as a part of the accounting standard guidelines. That resulted in booking 47 crores, majorly booking for about 47 crores in that particular quarter. If you come back to this quarter, current quarter in June 2021, the yields have actually risen in this quarter, resulting in NAVs going down. And because the NAVs are going down or maybe remaining stable, there have been certain redemptions also, which we have been which were scheduled. So you see that those means since we have a normal scenario where the mark-to-market is minimal, you find that our investment income has come down to 17 crores for this quarter. And this is based on the existing investment yield scenario currently, in line with the same.
Okay. So in that case, what could be the baseline that we can consider if we keep aside the MTM number that BSE can expect to earn from its funds?
So see, you can take it like this, that there is nothing exceptional nothing majorly exceptional in the current quarter, and probably that way you can estimate. Obviously, there will be some dividend income which will come from our associates and subsidiaries. So that would be another thing. Otherwise,
but basically, if you look at the Indian accounting standards, the companies with a lot of money at hand or cash at hand or bank balances at hand will see a lot of volatility going forward also in their other income.
Definitely, Mr. Chauhan. So what I understand is that 17 crore is the amount, or something like 20 crore is the amount that we can expect to earn on quarter, normally as our realized gain from investments.
Yeah, and then you add some dividend which we get from our strategic investments, whatever we get.
Yeah. Okay. Thank you so much for answering my question.
Thank you. The next question is from the line of Jagdish Rayala, individual investor. Please go ahead.
Am I audible?
A bit louder, please.
Hello. Yeah. Can you hear me?
Okay.
Yeah. Congratulations on the great quarter. So one question I had is on the competition side, so the volume currently are still pretty less compared to the largest exchange.
Mr. Rayala, sorry to interrupt you. This is the operator. Sir, we can't hear your audio clearly. I would request you to increase the volume of your device, sir, or speak a little bit louder.
Yeah. Hello.
Yeah, please go ahead.
Yeah. So my question is on the competition side, the largest exchange basically has the volumes are pretty high compared to our company. So how do you plan to tackle this to increase the volumes going forward? Thank you.
It is a perennial question, and we continue to work hard to provide better services, better technology, and hope that people come to BSE to trade. Of course, the interoperability and the best price execution and other things do help. But it's a way of innovations, creating newer products, newer instruments, whatever is allowed to us in the highly regulated environment, and hope that using newer products like IPOs or bonds or commercial papers, people see our services and they come and trade more, including interoperability. And of course, some people also get to know that it's important to have sort of order flow going to more than one exchange because of the risk that they carry by going through only one exchange and so on and so forth. There are many ways we are trying to bring it, and it will continue.
Okay. Yeah, interoperability is really good. Hopefully, more brokers come in, I think that will be really good. Thank you.
Thank you. The next question is from the line of Prateek from Civica India. Please go ahead.
Am I audible now?
Yes.
Yeah.
Little bit.
Firstly, many congratulations to Ashish sir and entire BSE team for this putting up an exceptional show in this quarter. Ashish sir, just want to understand that I've just gone through that investor presentation. In that, the market share for the equity derivatives and equity cash is around 7 odd percent. So just want to understand that, do you think that this will going upward in coming future, and what the company thinks that how new strategies will apply to increase this market share in this, specifically this equity derivatives and equity cash segment?
Basically, the market share has increased manifold, especially in derivatives. Equities also, I mentioned to you about interoperability and the best price execution, better technology, better services, lower cost of connecting to us, more efficiency, and so on and so forth. So that will continue to be a strategy for the equity derivatives, currency derivatives, interest rate derivatives, commodity derivatives, and in fact, commodity derivatives also, although we didn't ask, we are almost touching 10% market share, and we have become second largest commodities exchange in India, and in options, where in equity derivatives, options are ruling the roost, right? And commodities also, given the CTD that is applicable on futures versus options, we think market is going to develop more towards options, and we are becoming 70% of that market, options on goods. And so there are things we are doing, there are things which are helping us due to our technological superiority that hopefully will bring the new investors, new traders, old investors, and everyone else. On quarter also, if you see our equities market volume growth on a higher sort of volumes is now 8% plus, while as earlier, immediate previous quarter, it was close to 5%. And so that is where basically you can see there is a movement, how fast, how far, all those things still remain a matter of conjecture, and only time will tell. But our work will continue.
Yeah. Okay. Thank you so much, sir. And all the best for the future quarter. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Two questions. One, we had taken the transaction charge increase on the BSE stock exchange. So when was it taken, and how much of it has flowed in quarter one, or how much is likely to flow in incremental quarters?
The transaction charges were, as I said in my speech, it was on March 1, 2021. And it was around 8-10% increase. So that's what you can count on if the volumes remain the same.
But when I look at the QOQ revenue, it's the same. So it seems that 10% transaction charge has not flowed through the revenue, or I'm interpreting it differently?
I think you are interpreting differently, because there is a clear increase in revenue due to the transaction charges on equities.
So on a QOQ basis, considering that the BSE volumes were largely flat, which of the piece of our business at the overall revenue has come down to offset that 9-10% increase in the transaction charge?
No, I'll tell you, it's like this, that we had increased the charges from March 1st, and so obviously we had a 1 month's increase already factored in the previous quarter. And in the current quarter, there has been a type of more activity in the mid-cap side of the market, which has resulted in, if you have gone through our presentation, you will find that our exclusive income has gone up significantly in the current quarter. And that is one of the big reasons where, while the broader market was more or less same as compared to previous quarter, we got much higher revenue in the current quarter. We got higher revenue from the exclusive segment, where we did not increase any charges.
Our revenue from operations has gone up from 103 crores to 156.95 crores. So in a way, It's almost.
No, sir. I am analyzing QOQ, sir. What you're referring is what?
No, if you do QOQ also, our equity income in previous quarter was 36 crores, which has become 47 crores.
So then there has to be some other income which has to come down for the revenue to be flat QOQ, right?
But 36 to 47 cannot be considered flat, no, boss?
No, sir.
One second. One second. I'll tell you.
On the presentation you are looking at, na?
No, sir.
No, what you are
total? Yeah.
What you are saying is total, na? So if you see total transaction charges, you are saying the which figure are you saying? Let me find out.
Which page? Page number 8.
So I'll again rephrase my question.
Page number 8.
If you see your total revenue from operation is 157 crores versus 152. So there is a 3% increase, but the transaction charge is about 10% increase. So there has to be some portion of the business where there is either some softness or there is some other interpretation is what I wanted.
Yeah, I got it. I got your point. See, it's like this, that there is a decrease in the revenue from listing and book building services as compared to previous quarter. In the previous quarter, our services to corporates was 66 crores. It has become 58 crores, 58 and a half crores. So that is what explains what you are seeing, the flattishness in our revenue from operations. And the securities side, on the trading side, it increased from 71 crores to 84 crores.
Okay. So now that explains it.
And listing has two aspects to it. Yeah. One is what I call the annual revenue, which is basically the annual listing fees, which is a large portion. And then there is an additional portion of the IPOs and bond distribution and all for software related stuff or buybacks and all. So that is where there is a volatility usually.
Okay. And my second question is, on the BSE platform where we are doing about 10 crore quarterly revenue, is it operationally profitable, or at what should it be a substantial operating profit generator?
It is operating profit.
It's operationally profitable. Can you quantify how much operationally profitable it is?
So if you take on a round of basis type, our profit before tax would be around 35% up. On this business, it can vary from time to time depending on transactions, but they are generally increasing. So obviously we have got good margins here.
It's 35% on the revenue of the BSE platform.
Yeah.
Okay. And just an associated question, what would be your market share then in the total transactions of MF? So online, offline, whatever modes. You have given a market share on the inflow side, but on the total transaction side?
We are not aware of the total number of transactions, but we are doing around 1.3 crore transactions a month. If you know the rest of the industry put together, then you will be able to figure out what is happening. And we are growing at 90% year on year. And so you can see, that is last till now. That doesn't mean we may grow at that level for next 100 years, but broadly you can see where I'm going.
Okay. Thank you very much and all the best to you, sir. Thank you very much.
Thank you. The next question is from the line of Anuj Kumar from B&K Securities. Please go ahead.
Good evening, sir. Congratulations on an excellent set of numbers, and very happy to see the oldest exchange performing in a good manner. My question is on the transaction charges on Star Mutual Fund. If you could tell me, what is the current blended realization, sir?
The blended realization currently is around 3.4 rupees per transaction.
So has it fallen from the last quarter? If I'm not wrong, it was 3.6.
Yeah, by a few bits it has fallen because the number of transactions have increased drastically. And what happens is that when as the transaction number increase, obviously because of the cost structure and revenue structure.
Slab-wise, so if people go into higher slabs, we charge lower per transaction.
Okay, fine, sir. The next question is on the value unlocking. Do you see this as next CDSL on seeing the extraordinary potential?
No, it's a good question. When CDSL was with BSE, nobody saw it as a potential. right? So that is true. People go in search of monopolies, and monopolies for 10 years can give you bad results compared to not so monopoly. And this you can see even in this quarter. One of our peer for 10 years is a monopoly, but always gives lower profit than us, and still they have double, triple our value. So that is what because basically when people search for monopolies, this is what happens, right?
Yes, sir. Sir, if I can squeeze in two more questions. The thing, where are we heading towards in currency derivatives, sir? It looks like we are losing market share in the last 2 years from 45% in FY19 to 25%. Is it down to the third-party trading software operability issue alone, or is there anything because the competitor volume has fared well when compared to us? So where are we heading in currency derivative segment?
It's basically we've seen a decline in the trend since the COVID started basically, and what happened is majority of our participants are the nationalized banks who participate on a majorly basis on our exchange, and due to this COVID situation, there was a restriction for them. Some had to work from home, some were not there in the office. There was major trading disabilities for those banks, and that's the reason we saw some slump in the volume. But nevertheless, we are on track now, and we look forward for the increased participation.
Yes. Sir, in one of your earlier con calls, you made a statement like if equity derivative comes, then equity cash market segments automatically improves. With the growth in equity derivative in the last quarter or probably the last 9 months, has it been able to translate it to the cash market segment?
It's early days. I would say it's still early days.
So where do we hit, sir? In the any growth number which you can give for the year with respect to Trump?
Basically, we hope that at some stage this will be a kind of a virtuous cycle between the two, right?
Yes, sir. Thank you, sir. Thank you so much. Thanks.
Thank you. The next question is from the line of Pawan Nahar, individual investor. Please go ahead.
Yeah, thank you. So I just wanted to ask you, after interoperability, I mean, is best execution something that you see will be implemented by most brokers?
Actually, interoperability was announced 3 years back, and it was a hope and a belief that everyone had implemented. Only on February 24, 2021, when one of the exchanges closed down, people realized that it was a fake belief. Actually, interoperability was there only on paper, not really implemented at various levels. And so that's where basically BSE also came to know and issued a circular saying you need to implement and so on and so forth. That's where now slowly the movement has started because people had not bothered to make those softwares, implement them and so on and so forth. So slowly the movement has started.
No, so my question is, interoperability, the way I understand it, right, versus best execution. Best execution, the way I am looking at it, it's just a button which says that just get me the best volume price combination from either exchange by placing only one button.
Interoperability is different from best execution, yes. But what you are saying is correct. Both are different, but it's doable. You can do best execution without interoperability, and you can do interoperability without best execution. And till now, both were not there. Now both will be there.
So what is the update on implementation of best execution? For example, Zerodha, which is the biggest broker, has not done it yet.
I would not comment on a particular broker, but I think broadly most brokers are trying to implement it as of now.
And last call or a call before that, you mentioned one broker which has done it, which was BNP or Geojit, I don't remember. But like, how many brokers have done it? And what is the, like, I'm sure you'd like to push for it, and what is preventing it from happening?
I mean, I have not mentioned in this part, but I had, I think, put it on some Twitter or something a few months back when one broker had shown it on the, I mean, I got some video capture of that. And so it's basically telling other brokers that you can also do it. Somebody else has done it and so on and so forth. Somewhere on the line, what stopped people is because it was not compulsory and life goes on. Everyone has to have many other priorities. So this had to become a priority after the February 24, whatever happened. It has become priority for people.
I don't want to, I'm not looking at interoperability. That is, separate thing. I'm only looking at execution. And is it like compulsory SEBI mandate that it has to be done? If yes, any thoughts why it is not happening?
Interestingly, SEBI mandate is there from the day SEBI was actually given the powers, from 1994. There are many regulations in India which are not implemented. They are there on paper, right? So this was one of that. And now it is getting implemented.
I'm sorry, sir. I'm harping on this. But again, you've been very vocal about interoperability, right? Would you be as vocal about best execution? Because to my understanding, it is very good for the investor who's buying or selling.
We are hugely vocal. You may not have heard our noise. Sometimes people heard selectively. But we are hugely vocal, and we have also issued a circular to common members who don't implement best price execution will also get penalized.
Thank you, Mr. Nahar. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, hi. Yes, sir, thanks for the opportunity. So my first question is on the on the equity derivative market share. So it's we have seen the early success where we have scaled the market share to around 6 to 7%. But if I see the market share has been constant over the last 3 quarters, and it is hovering in the range of 6 to 7%. So what are we doing there to increase it further? Like if you can elaborate in terms of any new products on the pipeline or any new offerings that we have there, so that we can scale that up. And second question is on the INX. So on the INX, we have seen that exchange doing really well. So any view when we will start charging on INX? Because earlier we had set a benchmark that if we do 1 lakh trades per day, then maybe we can start thinking of charging. But now we are way above that in terms of the number of trades that we are doing on INX every day. So any color on that will be helpful, sir.
Yeah, on INX there is no currently any visibility because the competition also doesn't charge there, and so we can't charge there yet. But let's see how far we go. Bond listings and all we have started charging. You know that we have 100% market share, close to $50 billion of bonds have been listed now, and there is a potential of even now listing stocks and other things after depositories start there. So it's going to be interesting play there. In terms of the local, domestic market in BSE alone, we'll continue to push for new products, current products with better technology, better services, and hopefully we will be able to get market share which is better like what we are getting in commodities currently. Commodities options on goods has actually helped us establish that business, and we recently started the Sufi steel billet contracts. And so you see some innovations are already happening. We have demand from few other associations to start. Today also, I think turmeric announcement was made. So you will see some interesting actions on some of this. At the same time, any instrument that is allowed in India has to go through the same process of consultative and other things and all. Of course, new interesting things like T+1 is coming. So whatever is allowed, we will be pretty much the thought leaders and implementation leaders going forward. At the same time, volumes are in the hands of many factors, and so we keep our fingers crossed.
Okay. And sir, on the pricing aspect, similarly on the like commodity part, as you mentioned. So the competition has also announced that they are going to start charging for the options, like commodity options there. So are we also planning on similar lines, or we are still going to offer it for free? Because I think
currently we don't plan to charge. We want basically figure out in many more products, because the competition which you mentioned is focused only on two commodities. We are focused on expanding the numbers and creating a real India-based market, and where the delivery happens, right? So it's a bit of a different philosophy, different strategy. But currently we don't have the plans to start charging in options market for goods.
Also because the exchange charges anyways is not a very significant part of the total trading cost, right? So why we are planning to, because not charging for the transaction doesn't help us to boost our volume significantly. So why we are sacrificing on that if you can get that revenue?
But you are yourself contradicting yourself. You are saying that it's so insignificant it doesn't matter. So why bother?
No, so anyways we are losing on revenue, no? So we can get the revenue.
If that revenue is if they were having that revenue, why is it that their revenue is probably 50-60% lower than ours on total, right? So if it is insignificant for them, it is even worse than less than that for us, right?
Okay.
And if that attracts more people to come on us, why not?
Okay. Okay, sir, fine. And sir, on the stake sale, that was a part of a regulatory exercise wherein we have to bring down our stake to 15%. So is there any timeline to that, or we still have
October 23 itself. October 23.
Yeah. Abhi to samay hai. It's October 23 is the last day.
Okay. So by October 23, we have to bring it down to 15%, right?
As of now, that is the regulation. Of course, you have seen also as much newspaper as I have seen about some change in thinking process and all. So let's see.
Okay, sir. Okay, sir. Thank you and all the best, sir, for the future.
Thank you, Amit. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Yogesh Joshi for closing comments.
Thank you all for attending BSE's investor call. Take care.
Thank you.
Thank you.
Good night.
Thank you. Ladies and gentlemen, on behalf of BSE Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.